Picking a lender might be the single most overlooked decision in the entire home buying process. You see, most first time buyers spend weeks scrolling through homes on Zillow, but only spend 10 minutes picking who they're going to borrow hundreds of thousands of dollars from. And that's a mistake because the lender you choose can affect your interest rate, your closing costs, how smoothly your loan goes through underwriting, and even whether your deal closes on time. My name is Robert Porto, and I'm a home loan advisor. My team and I have helped hundreds of families across the nation navigate the home buying process while making it stress free. In this video, I'm going to walk you through exactly how to choose a lender and the specific questions you should ask when you're interviewing them. Let's get into it. A lot of first time buyers just go with whoever the real estate agent recommends or whoever their bank is, and sometimes that works out fine. My take is go with a lender that takes the time to explain the process and also has a strong post-closing strategy. Just know that interest rates and fees can vary meaningfully from lender to lender, even on the exact same day for the exact same borrower. Some lenders specialize in certain loan times. Some have faster underwriting teams. Some charge more in origination fees to make up for a lower advertised rate. The good news is that shopping around does not hurt your credit if you do it the right way. As long as you get all your mortgage quotes within a specific window, generally 14 to 45 days, depending on the credit scoring model, those inquiries get bundled together and treated as a single inquiry for credit scoring purposes. So the strategy here is simple. Do your research using different sources. Mortgage brokers, credit unions, online lenders, and traditional banks all have different strengths. Casting a wide net costs you nothing but a little time. Now, here are the types of lenders to consider. Before we get into the questions to ask, let's quickly cover the different types of lenders you might be comparing. Retail banks, your traditional national or regional bank. Convenient if you already have a relationship there, but not always the most competitive on rate. Credit unions often have lower fees and more personalized service since they're member owned, but loan options can sometimes be more limited. Mortgage brokers, these don't lend their own money. Instead, they shop your loan across multiple lenders to find you the best fit. This can be a great option if you want someone else doing the legwork of comparing rates for you. Direct online lenders, these have grown a lot in popularity. They can offer competitive rates and fast turnaround times, but you lose some of the in person relationship and local market knowledge. Local independent lenders, smaller companies that often specialize in certain loan programs or have specially strong relationships with local underwriters, which can speed up your closing. You see, there's no single right answer here. It really depends on your priorities. Someone who wants the absolute lowest rate might shop online lenders aggressively. Someone who wants a high touch experience with someone they can call directly might prefer a local independent lender. Keep that in mind as you start reaching out. So let's get into the questions. Question number one, what is my interest rate and APR? This sounds obvious, but there's an important nuance here. Your interest rate is the percentage used to calculate your monthly principal and interest payment. Your APR, or annual percentage rate, includes the interest rate plus most of the lender's fees, expressed as a yearly cost. APR gives you a more complete picture of what the loan actually costs you. You see, two lenders might quote you the exact same interest rate, but very different APRs, which tells you one of them is charging more in fees. So always ask for both numbers and compare from there. Just know that rates move daily, sometimes multiple times a day. So if a lender gives you a quote, keep in mind that it may not be valid the next day due to market changes. Though it should give you a good idea of where they stand, know that this truly matters when you're in escrow and are ready to lock your interest rate. Question number two, what will my closing costs be? Ask every lender for a loan estimate. This is a standardized document required by law that breaks down your projected closing costs line by line. Because it's a standardized format, it makes it much easier to compare lenders apples to apples. Pay close attention to origination fees and discount points in box A. Origination fees are what the lender charges for processing your loan. Discount points are an optional fee you can pay upfront to buy your interest rate down. And sometimes a lender will quote you a lower rate but vary the cost in points, which raises your closing costs. The question to ask directly is this: walk me through every fee on this loan estimate and tell me which ones are negotiable. Some fees generally are negotiable. Others, like government and recording fees, are fixed no matter who you go with. A good loan officer will be transparent about which is which. Question 3. Is your rate borrower paid or lender paid? This is a question most first-time buyers have never even heard of, but it can meaningfully affect your closing costs. When you get a rate quote, that rate is tied to a compensation structure for the loan officer, and it comes in one of two forms. With borrower paid compensation, you have more flexibility to negotiate the rate and the points, but the loan officer's commission is built into your closing costs, either through fees or a slightly higher rate. With lender pay compensation, the lender pays the loan officer directly out of their own margin, which can sometimes mean less room to negotiate the rate itself, but it may also mean fewer fees coming directly out of your pocket at closing. Neither structure is automatically better. It depends on the specific numbers, but here's why that question matters. It helps you understand why a rate is priced the way it is and whether there's room to negotiate. So ask directly, is this rate borrower paid or lender paid? And is there flexibility to adjust points or fees based on that? A transparent loan officer should be able to answer this clearly and explain how it affects your specific loan estimate. Question number 4, what loan programs do you offer and which one fits my situation? Not every lender offers every loan type. Some specialize in conventional loans, others have strong FHA or VA departments. Some have access to state or local first-time homebuyer assistance programs that others don't. So ask directly, based on my financial situation, what loan programs am I eligible for and why you're recommending this one over the others. A great loan officer will walk you through the trade-offs, not just hand you one option. If a lender only seems to offer one type of loan, no matter what you tell them about your situation, that's worth nothing. Quick pause. If this video is helping you feel more prepared, go ahead and hit that subscribe button. We post new videos every week breaking down the home buying process for first-time home buyers. No jargon, no fluff. All right, let's keep it going. Question 5. How long does your underwriting process take? Some lenders close loans in 3 weeks. Others take 6 to 8 weeks. This matters a lot, especially if you're on a tight timeline with your seller or your current lease. So ask, what is your average time from application to closing right now? And follow up with, what could cause that timeline to extend? A lender who can give you a confident, specific answer with real numbers is usually a good sign. A vague answer like, it depends, without any further explanation, might mean they don't have a tight handle on their own pipeline. Question 6, who will be handling my loan? And how will we communicate? This question matters more than people expect. You see, you want to know if you'll be working directly with one loan officer throughout the process, or if your file gets passed around to different processors and underwriters with little continuity. So ask, will I be working with you directly throughout this process? And how quickly do you typically respond to questions? During underwriting, you may need to respond to document requests quickly to keep your closing on schedule. If your loan officer is slow to respond or hard to reach, that delay can ripple through your entire timeline. Ask current or past clients for references if you can. A quick Google review search can also tell you a lot about responsiveness. Question 7, can you provide a pre-approval letter and how strong is it? Not all letters carry the same weight. Some lenders issue a pre-approval after a quick conversation and a soft credit check. Others fully verify your income, assets, and credit before issuing what's sometimes called an underwritten pre-approval or a fully underwritten pre-approval. A fully underwritten pre-approval can make your offer significantly more competitive because the seller knows your financing is far less likely to fall through. So ask, is this a basic pre-approval or have you actually verified my income, assets, and credits? If you're buying in a competitive market, ask if they offer a more thorough pre-underwriting process. It could be the thing that gets your offer accepted. Recap and next steps. Let's bring it all together. Here are the questions to ask when you're interviewing a lender. 1, what is my interest rate and APR? 2, what will my total closing costs be and which fees are negotiable? 3, is your rate borrower paid or lender paid? And what does that mean for my closing costs? 4, what loan programs do I qualify for and why is this the right one for me? 5, how long does your underwriting process typically take? 6, who will be handling my loan and how responsive are you during the process? 7, how strong is your pre-approval and have you fully underwritten my file? And remember, the lowest rate doesn't always win. A slightly higher rate from a responsive, transparent lender who closes on time can be worth far more than chasing the absolute lowest number from someone who goes silent for a week during underwriting. Drop a comment below. Are you currently shopping for lenders or did you already pick one? I read every comment and I'm happy to help. And if you haven't subscribed yet, we post every week to help first-time buyers like you navigate this process with confidence. See you in the next one.